Welcome, everyone, to this deep dive. We're digging into the sources you shared, pulling out the crucial bits.
That's right.
And today, it's all about something really vital in the banking world, modernizing the user experience, the digital brand.
Yep.
We've got a great article here from UXDA, and basically our mission is to figure out why banks, why they really can't afford to ignore their digital side anymore.
And what it actually costs them if they do ignore it.
Exactly. What are those real costs of just, standing still?
Yeah, and it's interesting because banking is built on trust, stability. That's the tradition.
Right.
So clinging to the past digitally, it might seem safe, but this article really asks, is it actually safe, or is it, a pretty costly risk?
Really sets it up well. And just to throw a number out there that caught my eye from the article, something like 76% of consumers, they say they'd actually switch banks just for a better digital experience.
Yeah, 76%. That's huge.
Yeah, it is. That's a massive potential churn right there. So,
Sure.
Okay, let's dive in. First off, how has the landscape actually shifted for banks?
Well, like we said, stability was king, but the digital age, it's just changed everything, hasn't it?
Totally.
Customer expectations are completely different now. People judge their bank really heavily on its digital face.
You mean like the mobile app?
Yeah, the mobile app, how easy is it to use? How fast are the online services? Is the communication clear when it comes through digitally? A clunky experience, it's not just annoying, it's actually a negative signal about the bank itself, like maybe
Right.
they're not up to snuff.
Okay, so it goes beyond just aesthetics. It shapes the whole perception.
Absolutely.
And the article mentions there are players out there really pushing things forward, right?
Yeah.
Setting new standards.
Oh, definitely. The rise of fintech disruptors, that's been a massive game changer.
Like who? Revolut, Monzo.
Exactly. Companies like that, they've set these new, much higher benchmarks for what a digital financial experience should feel like.
So intuitive, right?
Yeah, seamless interfaces, really intuitive design. And now that's kind of the baseline expectation that traditional banks are scrambling to meet.
Okay, which brings us to this idea, maybe a flawed idea, that just sticking with the old systems, the kind of generic interfaces, is actually cheaper for banks.
Right, the save money argument.
Yeah, but the article jumps right on that, doesn't it?
It really does. I mean, yeah, the upfront cost of modernizing can look big, so maybe keeping the status quo seems financially sensible short term.
Seems.
But the article digs into what it calls the hidden costs of inaction. And honestly, when you start adding those up, they dwarf any apparent saving.
Okay, let's unpack those hidden costs then. This is where it gets really interesting. First one up, brand erosion. How does not keeping up digitally chip away at a bank's brand?
It's fascinating, actually. Your digital presence now, it's basically core to your brand identity.
How so?
Think of the app or the website as like the new bank lobby.
Okay, good analogy.
If that lobby is old, clunky, hard to navigate, it sends this subconscious message, right? That the bank itself might be old-fashioned, maybe less capable of handling modern needs.
So it's not just how it looks. It hits trust and competence perceptions.
Exactly. And that Salesforce statistic mentioned 59% of customers seeing cutting-edge digital as essential for keeping their business. That really nails it.
Wow. Okay, so the digital lobby matters a lot. What's the next hidden cost?
Opportunity costs. This is about the money they're not making.
How does that work?
Well, by not having a modern UX, they're basically forfeiting potential revenue. They're missing out on attracting those digitally savvy customers.
Right, the ones who expect a good app.
And they risk losing the customers they already have to competitors who do offer a better online or mobile experience. It's less obvious than, say, maintenance costs, but it hits growth hard over time.
Okay, so standing still isn't just saving money, it's actively losing future business.
Yeah.
The article also brings up security. That feels like a big one.
Oh, it's huge. Non-negotiable, really. Outdated systems are just, they're much more vulnerable.
To cyber attack.
To increasingly sophisticated cyber threats, yeah. And the article is right to stress this. The cost of a security breach, financially, reputationally, it can be absolutely devastating. Far, far more than upgrading the systems beforehand.
No question. Customer trust is everything there. One breach can shatter it. Okay, next hidden cost. Stagnation in customer experience.
How does letting digital touchpoints get old affect that customer relationship?
Well, think about how high expectations are now. People use slick apps for everything else. Shopping, streaming, social media.
Yeah, everything's seamless.
Exactly.
Yeah.
So when their bank's app or website feels clunky or frustrating compared to that, Well, it creates friction.
And annoyance.
Big time. And like the article notes, those pioneers, Revolut, Monzo, they've shown what's possible. So there's this gap, right, between what customers expect and what some banks deliver. And that gap, it eats away at trust and loyalty. It feels like becoming irrelevant almost.
Right.
If you can't offer what people expect, they'll just go somewhere else.
Pretty much.
Okay, the article also mentions operational inefficiencies. What are the internal drains from old systems?
Yeah, this is often overlooked. Just the sheer amount of resources needed to maintain old legacy technology, it can be enormous.
Like just keeping the lights on, digitally speaking?
Exactly. Huge maintenance costs. And that money could be going into innovation, right? Plus, these old systems, they're often really rigid, hard to adapt to new market trends, new regulations, even just adding new services. That increases operational risk, too.
So it costs money to maintain, and it prevents you from moving forward easily. A double whammy.
Got it.
Next point, missed growth opportunities. How does a static digital approach limit expansion?
Well, today, a dynamic digital presence is basically your growth engine. If you're not using modern digital strategies, you're missing huge chances.
Chances for what?
To attract new customer groups, maybe younger demographics. To offer tailored products based on data. To cross-sell effectively to the people you already have.
Things like personalized advice, easy onboarding.
All that stuff. It's all enabled by modern digital platforms. You just can't do it effectively with outdated tech.
Right, using tech to build stronger connections and offer more value.
Right.
Okay. Then there's eroding brand differentiation.
Yeah.
How does a stale digital look make a bank just blend in?
Well, think about it. For lots of customers, especially younger ones, the app is the bank. That's their main interaction.
True.
So if your digital stuff is just generic, looks like everyone else's, isn't innovative, how do you stand out? How do you attract people looking for more than just the basics? You risk looking, well, archaic, out of touch.
Yeah, in a digital world, that digital front door is your first impression, maybe your only impression sometimes. Makes sense. The last hidden cost mentioned is interesting. Slowdown of internal culture and workforce.
Yeah, this is an important angle. Old tech and clunky processes, they really hit employee morale.
Especially younger staff.
Especially the digital natives, yeah. They expect modern tools. They want to work for innovative companies. If your internal systems feel stuck in the past, it's frustrating. It lowers productivity. And ultimately, you lose good people.
And losing talent makes it even harder to transform digitally down the line.
Exactly. It's a vicious cycle.
So it's not just about customers. It hits the bank's internal health and future ability, too. Okay, so the article then shifts gears, right? Moves from these potential risks to actual real-world examples.
Yeah, it draws on insights from like a decade of talking to executives. It shows how this inaction isn't just theoretical, it has had real consequences.
What's the first example?
Customer attrition, people leaving.
And the data here looks pretty stark. That Ipsos survey from Great Britain, comparing digital banks like Monzo and Starling to the traditional ones.
Oh yeah, very clear picture. Monzo, Starling, satisfaction rates up in the mid-80s.
Wow.
While the big traditional banks, high 60s, low 70s, that's a big gap.
A huge gap. What's driving that?
Well, the article talks about the emotional, dopamine-driven designs of the digital banks. It's not just that they work well. They're actually engaging, maybe even enjoyable to use.
So it creates a stronger connection, more loyalty.
Seems like it. It suggests banking doesn't have to be purely functional. Good design can create positive feelings.
Interesting. Okay, next, real-world impact. Operational inefficiencies and support center overload. We touched on the cost, but how does it play out day to day?
Well, that Capgemini report figure is pretty staggering. Up to 75% of IT budgets in North America and Europe just spent maintaining old systems.
75%? That's insane.
It's a huge drain, money that could be innovating. Plus, these fragile old systems, they go down more often, transactions are slower.
Which leads to?
Angry customers, flooding the support centers with complaints.
Right.
Which overwhelms the staff and just makes everyone more frustrated.
Yeah, a negative spiral. Old tech causes problems, problem swamp support, customers get angrier.
Exactly.
Okay, the article also flags negative buzz on social media. How significant is that?
In today's world, very significant. A bad digital experience doesn't stay private anymore.
People vent online.
Oh, yeah. That PwC stat, 32% of customers dishing a brand after one bad experience, the stakes are high.
Wow, one time.
And then the index report saying 63% of people are influenced by a company's social media support. Negative reviews, viral complaints, they spread fast and can seriously damage your reputation. Deter new customers, too.
Yeah, one bad tweet can echo far and wide. Okay, next point, brand erosion. but this time linked to investors.
Right. If investors see a bank isn't keeping up digitally, they might see it as stagnant, unable to adapt.
A bad sign for the future.
Definitely. It can hit the stock price, the overall valuation, makes it harder to compete with those agile fintechs or even the tech giants moving into finance. It just signals a potential lack of future growth.
So it hits the bottom line through market perception, too.
Okay.
Then there's poor customer loyalty in practice.
Yeah, this comes back to that emotional connection idea. Neobanks are really good at creating personalized experiences that build loyalty beyond just, holding your money.
Making you feel understood.
Something like that. The article mentions Mashrek Bank as a positive example, showing traditional banks can do this. But those stuck in the old ways, they're missing chances to really engage customers deeply, build relationships that last.
So customers stay not just out of inertia, but because they actually like the bank.
Ideally, yes.
Okay, next. Missed revenue opportunities. This feels very direct, very bottom line.
It is. We live in a data-driven world, right?
Yeah.
But outdated systems, they limit your ability to actually use that data effectively.
You can't see what customers need or want.
Not easily, not in a granular way. So you miss out on offering targeted promotions, personalized products, timely advice, all the stuff that drives revenue growth now.
Right, using data to be more relevant and valuable. Okay. Then loss of competitive edge.
Yeah, the old product pushing model, it's getting outdated fast. Neobanks are using gamification, AI tools, hyper-personalization.
Making finance feel different.
Exactly. And tech giants, they're building these seamless ecosystems. Traditional banks relying on old models just struggle to stand out to stay relevant.
It's a constant battle just to keep up, it seems. Next cost. Higher customer acquisition costs?
Yeah.
Why does it cost more to get new customers if your tech is old?
It seems counterintuitive, but it often comes down to the sign-up process, the onboarding.
Ah, the first impression again.
Right. That statistic mentions 63% abandonment rate during sign-up because it's too complex. That's huge.
63%, just giving up.
Yeah. Compare that to Revolut or others with super smooth, quick onboarding. They get customers efficiently. Traditional banks with clunky processes, they often have to spend way more on marketing, on incentives, just to get people through the door. It makes acquiring each customer much more expensive.
So the bad initial experience drives people away and makes attracting the remaining ones costlier. Okay. Then there's stagnation and innovation.
Yeah, the structure of traditional banks, often very hierarchical, rigid, it can just slow things down.
Bureaucracy.
That, and maybe a reluctance to take risks, embrace new tech, partner with those nimble fintechs, whereas the forward-thinking banks, they're using agile methods, collaborating, constantly trying new things to stay ahead.
Fostering a culture that can actually adapt. Got it.
Yeah.
And finally, increased cybersecurity and regulatory risks, which circles back, but maybe with more teeth.
Definitely. It's not just about being vulnerable to attacks. Old systems also make it harder to comply with today's really complex and evolving financial regulations.
So potential fines, legal issues.
Big time. Substantial penalties, legal challenges, on top of the reputation damage if something goes wrong. So investing in modern, secure systems isn't just about data protection. It's really about protecting the whole institution.
Okay, these real-world examples paint a pretty sobering picture of doing nothing. But the article then pivots, right, to rethinking digital investment.
Yes, exactly. Shifting the mindset from digital as a cost to digital as an opportunity.
A crucial shift.
Absolutely. It argues that instead of seeing it as just an expense, banks need to view digital transformation as strategic investment, one with potentially huge returns.
And those 10x banking report stats underline this.
Yeah, 20% of customers lost due to poor CX, 64% of banks missing new customers because their digital transformation is too slow. That clearly shows the opportunity cost of not acting. The article really hammers home that most of those hidden costs we discussed, they can be totally mitigated, even turned into gains, with the right strategy.
And it lists reasons why this investment makes sense. Customer acquisition, retention, agility, future-proofing.
Let's dig into a couple. How does digital investment directly boost acquiring and keeping customers?
It's pretty direct. A smooth, easy-to-use digital experience. That's a magnet for new customers, especially younger ones.
Right.
And a bad experience. That's a major reason people leave for competitors. So better digital leads directly to happier customers, more loyalty. Simple as that, really.
Okay. And what about operational agility? How does modern tech help there? Modern systems aren't just prettier on the front end. They're built to be more efficient, more flexible, scalable.
Meaning?
Meaning banks can develop and launch new products faster. They can react quicker to market shifts or new regulations. They can integrate new tech much more easily. It gives them a real competitive edge in a fast-moving world.
Okay, the article also mentions future-proofing the brand. And what does that mean in practice?
It means sending a signal. A modern digital presence tells everyone, customers, investors, regulators, that this bank is forward-thinking, it's adaptable, it's built to last.
Like a sign of resilience.
Exactly. It shows commitment to staying relevant, builds confidence that they can handle whatever the future throws at them. It's key to long-term strategy.
And lastly, unlocking new revenue opportunities. How does digital help make more money?
Through data, mainly. Modern platforms have much better analytics.
So you understand customers better.
Much better. On an individual level, their needs, habits, preferences. That lets banks offer really targeted promotions, tailor products, give advice right when it's needed. That drives revenue through much smarter cross-selling and upselling.
So use tech to personalize the value, which boosts the bottom line. Makes sense. Now, the article does admit there's a big hurdle, the IT skills gap.
Yeah, and that's a real problem for a lot of banks. Finding the right people is tough.
People with skills in UX design, cybersecurity, data analytics.
Exactly. Demand for those skills is huge, supply is tight, and those IDC stats you mentioned, projects delayed, customer satisfaction dropping because they just don't have the skilled staff, that shows how serious it is, especially somewhere like North America.
So even if they want to transform, finding the people can be a major blocker.
It can be, but the article frames finding ways to bridge that gap, attracting, training, retaining talent as a massive opportunity itself.
The banks that figure that out will have a big
A
advantage.
huge advantage, yeah. They'll be the ones who can actually execute on the transformation.
Okay, so the article then looks at why banks might hesitate. What are the common barriers holding them back?
Well, a lot of it is kind of baked into the traditional banking culture, isn't it? Emphasis on risk aversion, compliance.
Playing it safe.
Right. So factors like just being risk averse, being comfortable with the old legacy systems, even if they're creaking. Then there's the sheer complexity of modernization, but looks like a massive, daunting project.
Understandable.
Plus short-term financial pressures, maybe focusing on this quarter's profits over long-term investment. Organizational inertia at big companies can be slow to change, and sometimes just a lack of a clear, compelling digital vision from the top.
These all sound like very real challenges for big institutions.
They are, but the article's point is that overcoming them is urgent. The long-term cost of not acting is just far, far greater than tackling these barriers.
Right, the cost of inaction outweighs the cost and complexity of action.
Precisely. That initial investment might look big, especially if you're focused on short-term results. But the real expense, the much bigger one, is falling behind. Every day you wait, those agile competitors are winning over your customers with better digital stuff.
It's a powerful point. Doing nothing is a choice, a very risky one.
And that's really the concluding message, isn't it? A call to action. Banks have to fundamentally rethink digital. The world changed. Sticking to old models, old tech, it's just not viable anymore.
Continuous investment isn't optional.
It's essential for trust, for relevance, for profitability. It's basically table stakes now.
So wrapping up this deep dive, the core message seems crystal clear. For banks today, putting off modernizing their digital experience and brand isn't just missing an opportunity, it's a massive strategic risk.
Yep.
The downsides, losing customers, damaging the brand, missing revenue, security risks, they just massively outweigh the cost of actually modernizing.
That's the heart of it. The digital landscape has totally reshaped everything. Banks that don't adapt don't keep investing in digital. They seriously risk being left behind by nimbler, more customer-focused competitors. Digital transformation isn't a nice-to-have anymore. It's survival.
Absolutely. And on that critical note, maybe a final thought for everyone listening. Think beyond the immediate budget for upgrading systems. Consider the potentially huge long-term cost of just fading into irrelevance in this digital-first world. What are those unseen consequences down the road if banks don't truly prioritize their customers' digital lives?
Good question to ponder.
Thank you for joining us for this deep dive.